and for all of you who celebrate Happy Latino History Month. Today, we are going to be focusing on home ownership because we know that owning a home offers long-term stability and the potential to build wealth, including generational wealth. Real estate is typically a long-term appreciating asset with opportunities for significant value growth over time. And I think everybody who lives in California understands that very well. That is why it's important to understand the various ways you can leverage that little treasure chest known as your home equity. To help us in today's discussion, we have our friend Wendy Estrada, who's a financial expert. But before we, turn over the program to her, I would just want to take a quick informal poll. And please, just, comment on the chat, and jump into the conversation. But the question is, what would you most likely use your home equity for? Like if you want to pull money out of your home equity, what would you use it for? Do you want to do it for home renovations and improvements? Do you want to pay off high interest debt? Do you want to use the home equity to purchase other investment property? Fund your retirement? Just, enter in the conversation, enter in the comments, what you'd like to use your home equity for. So you have all this money there in your home equity. Oh, there we actually have a poll going. So let us know, what would you like to use a home equity for? Do you want it to, improve your existing house, pay off debt? Good. I see people looking to pay off, especially the high interest debt, like credit cards. Yeah, purchasing, using your money to buy another property and growing your portfolio, funding your retirement. That's another one. All right. So it seems like most people want to improve their home, which is a wonderful investment, right? It keeps increasing the value of your property. You may want to remain in your house, so you may want to make it a little age friendly. So renovations. So it's like, Wendy, it seems like, home renovations are like number one, and paying off high interest debt would be the next one. So thank you, everyone. You can see there, right? So in that order, home renovations, paying off debt, purchasing others. So thank you so much, everybody, for sharing and responding. I mentioned that we have an expert with us, Wendy Estrada. She's been with us before. We love her so much. We've invited her to join us again. So please, she's going to, tell us a little bit about, home equity and what we can, various options around that and what you can do with it. But also, if you have questions, please use them, put them on the comments, whether even if you're watching on YouTube or the chat box. So, this is our time. If you have a specific question, please, ask it. Wendy will try to get to as many questions as possible. So now let me turn over the program over to Wendy. Hola, bienvenida, Wendy. Hello.
Hello, thank you, Patricia, so much for having me here. Hello, everyone that's part of AARP. It's a pleasure to be here with you all and also honoring our National Hispanic Heritage Month. Today, we are going to be talking all things unlocking financial opportunities through your home's equity. And although we don't have a PowerPoint, I'm going to walk you through a lot of the myths and the options that are available and, maybe the challenges and what different things you could do with your home's equity. Please feel free to put your questions in the chat. And we will also have some stopping points during the presentation for you to ask any questions. As Patricia mentioned, my name is Wendy Estrada. I am a senior loan officer. And my job right now is to help buyers with the purchase of their first home, second home, investment home, figuring out different opportunities to leverage their equity. So I'm super excited to be here with you all and just provide information, because through information, we educate ourselves and we're able to make wise financial decisions. renovations, and that's very important for me. So anyways, let's talk a little bit about what the definition of home equity actually is. So home equity is really the difference between your home's market value and the remaining mortgage balance. So for example, your market value is $800,000. Your mortgage balance is $440,000. Basically, the difference, the equity that you have in this scenario is $360,000. Now, what are some benefits of having home equity? Well, 40% of you mentioned you wanted to do home renovations. I think 30% also mentioned that you wanted to pay off some debt. And those are some of the benefits and why some people use their home equity. They use it to either access cash for expenses such as medical bills, home renovations. They use it to potentially lower their interest rate compared to personal loans, and we'll talk about that a little bit more during our discussion. And they also use home equity for opportunities for investing or retirement funding. Now let's talk a little bit about the types of home equity products. So there's a few different types of ways that you can use your home equity. One of the ways is through a home equity loan. And what a home equity loan is pretty much a lump sum loan that has fixed interest rates and a fixed term. The second product you might have heard about is called a home equity line of credit. It's also known as a HELOC. A HELOC works very closely like a credit card. It's a revolving credit and it provides variable interest rates. And once you pay it off, it can be used again. That is a home equity line of credit, also known as a HELOC. And then we also have another option, which is a reverse mortgage. And a reverse mortgage is converting the equity of your home into cash without monthly payments. But during this discussion, we'll mostly focus on home equity products. Now, let's talk a little bit more about what a home equity loan. Remember that a home equity loan provides a lump sum payment. So that is the structure. The interest rate is fixed during the duration of the actual loan. The repayment, you have set monthly payments that are required because it's an actual loan that has a monthly term. And the use of the funds can be for any purpose, and it's often used for expenses like home renovations and debt consolidations, where you know exactly what loan amount you will need right off the bat. Now let's talk about a home equity line of credit, a HELOC. So a HELOC, the structure is a revolving line of credit. So again, think of it like a credit card. The interest rate is variable depending on what's happening in the market. Your repayment is typically very flexible because you can borrow and repay multiple times. The repayment for the home equity lines of credit are typically as long as 20 years. So they provide a lot of flexibility. And the use of funds for a home equity can be for any purpose. Often they are used for large expenses, again, like home renovations or debt consolidations, or for different purchases that are not going to be paid off in a long term. You want to have the flexibility of having the home equity line of credit, paying it off if you want to, because there's typically no prepayment penalty, and you don't want to be stuck with a term loan that has a specific monthly payment and a specific end date. Then you get a home equity line of credit, a HELOC. Now let's talk about a reverse mortgage a little bit more in detail. So a reverse mortgage, the structure is that it converts your home equity into cash without having monthly payments. The interest rate is usually fixed or variable, but it's added to your loan balance. The repayment is deferred until the homeowner moves out, sells the home, or passes away. And the use of the funds typically is for retirees to access funds for living expenses such as healthcare or other needs while staying in their home. And that is a reverse mortgage. Now, let me stop there. What questions do you have on a home equity loan, a home equity line of credit, or a reverse mortgage?
And for those of you who just joined us, I know people are, coming in. I'm Patricia Perez. I'm a volunteer and I serve as AARP California State President Emeritus. And joining us is Wendy Estrada, a Senior Loan Officer. We're talking about what to do with that, fabulous home equity that you have. She's talked about, let me see, Wendy, let's see if I got this right. The reverse mortgage, HELOCs, which is a home equity line of credit, and the home equity loan. If a lot of this information is coming at you too fast, don't worry, we're recording this. So later you can view it again and you can, see if you missed any of the information. So don't worry about it. The other thing is if you have questions, please type them in on the chat, on the comments, please just go ahead, submit your questions. Wendy, why don't you continue?
Thank you so much. All right. So again, please put your questions on the chat. You can unmute yourself if you want to. So now that we've talked a little bit about the benefits of home equity, the definition of the 3 different types of home equities, let's talk a little bit about the possible risk and considerations. So a home equity is great, but you need to consider that you are borrowing money against your home. So there are potential risks such as foreclosures, potential risks such as increasing debt, or an impact on your estate planning, depending on how it's currently structured. I wanted to share with you a couple of success stories because, in my opinion, as long as you are well informed, you understand what the benefits are, there's a lot of ways that you can successfully use your home equity. So let me give you the first success story. So in this success story, we have a client who has a low mortgage rate, who doesn't want to refinance their mortgage, but they have high revolving debt they would like to pay off. So let's go over Lisa. Lisa has accumulated significant credit card debt with high interest rates. After consulting with her financial advisor, she decided to tap into her home equity line of credit, her HELOC. By doing so, she was able to pay off her credit cards at once, consolidating her debt into a lower monthly interest, HELOC. And this move not only reduced her monthly payments, but also improved her credit score, allowing her to save money in the long run. So Lisa did not touch her first mortgage. She wanted to keep that mortgage rate, but she wanted to pay off high revolving debt. So she consolidated all the debt into her home equity line of credit, which works as a revolving line, gives her the flexibility of having one monthly payment with a lower interest rate. There's no prepayment penalty that's applied either, so she can pay more towards the principal. And her credit score improved because now she paid off a lot of other high revolving debt that was impacting her credit score, allowing her to be able to use her credit for other things that she might need.
I'm sorry, Wendy,
Yes.
you're talking about HELOCs right now and and the success story.
Mhm.
Since the majority of the people responded in the poll saying they want to use their home equity for home improvements, would the home equity line of credit be the product that they use? Is that most likely for that?
Correct. And we're going to go through, let me see. Yeah, we have an example that covers
Okay,
that. So
okay.
let's go through that one. That's the next one. Thank you, Patricia. So the second success story is making a large purchase. So let's go over Sarah. Sarah dreamed of renovating her kitchen to enhance her home's value. Instead of draining her savings, she opted for a HELOC based on her home's equity loan. So Sarah didn't opt, she opted for a HELOC based on her home's equity loan. This allowed her to finance the renovation while keeping her emergency funds intact. So although she had money in her savings, she knew that she was going to stay in this home for a long period of time. She decided to get a home equity line of credit to be able to fund the renovation of her kitchen. The upgraded kitchen also not only transformed her living space, but also increased her home's market value. And that is one main key point that I wanted to make sure that I mentioned, that if you are using selling your home's equity, that it's either helping you consolidate debt where it's relieving stress, right? Allowing you to pay more towards the principal because now you only have one monthly payment, or that you're using it for things such as a kitchen renovation because in return, you're increasing your home's market value. And in this scenario, a year later, when Sarah decided to sell her home, the renovations helped her achieve a significant profit, demonstrating the effectiveness of her financial decision. And I'll give you another example of a client that this happened to. I had a client, they had a beautiful home that they've been in for 20 something years. They decided to sell the home and they sold the home for $940,000. The home did need a lot of upgrades and remodeling. So an investor bought it. That investor invested a couple $100,000 in that home, and fast forward not a year later, sold that home for $1.4 million. So if you as a seller were to use your home's equity to actually fund for the remodel before you actually sell your home, this is an example of where you can profit a lot more than if you were to sell your home as is, letting an investor buy it and letting them take the profit. So any questions on that example, Patricia?
Well, no, that just goes to show that all those HGTV shows that we watch, put them to good use, right?
Yeah.
That's something to consider if you are willing and, want to do that on your own. Doesn't mean you have to do the repairs, you hire out, but that way you get all the rewards, right? Rather than, what Wendy was saying, rather than handing it over to investors. Wendy, we actually have a question regarding the HELOCs. And the question is, what is the criteria for applying for this type of loan?
Yeah, so the HELOC or the home equity line of credit or the home equity loan, the criteria is pretty much the same. They're going to look at what is your mortgage balance, how much equity do you have. Ultimately, each lender has a specific loan to value that they cannot increase. So at times they cannot let you borrow up to 100% of your home's equity. So they will do the calculation for you depending on what you want to borrow and the balance on your mortgage. They're also going to look at your credit score. For most HELOCs or HELOANs, you need at least a 680 credit score. And they will look at the higher credit score you have, and depending on the lender that you go with, they might not verify income. The lower the credit score is, they will more than likely be verifying income. The application process is very simple. They can let you know in one day what you're approved for. The closing of a home equity typically takes about 15 days. So you can have, money in your pocket within 15 days. And the process itself is very simple. It's not like buying a home, all over again, but ultimately there are requirements where they do have to validate certain things, but it's a lot easy and, very efficient. I mean, you have 15 days, you get your home's equity. So.
Perfect. Do you have a case study, an example about a reverse mortgage? Because we're at that age, at a certain age, where we are being, directly marketed those products.
Yeah, well, that client that I talked about, that the home was bought by an investor, ultimately that client had a reverse mortgage. So that client was not able to pay for their mortgage anymore. They actually opted to go through a reverse mortgage where they weren't required to make a principal, or a monthly mortgage payment. They were given a monthly installment every month, and that helped that individual carry out the rest of, the taxes, the insurance, her other finances. And then ultimately, 5 years later, she was ready to actually sell the home and get rid of the reverse mortgage. So what you have to do at the time that you're ready to get out of the reverse mortgage is you have to put up your house for sale, figure out what the home is going to sell for. Let's say that you owe $200,000 on the reverse mortgage, the funds that they've given you up front during the duration that you've had the reverse mortgage. You would pay back those funds and you would keep the proceeds of the home, the rest of the proceeds of the home sale. Otherwise, if for some reason you don't do any of that, and let's say you're the only owner of the home, you pass away, your home is in estate planning, you would technically still have to do the same. Your survivors would then pay off that reverse mortgage. Otherwise, the bank would own that mortgage if no one intervenes and handles your estate.
Wendy, what are the cons of a reverse mortgage?
Well, I think a reverse mortgage, it's really depending on the needs of the homeowners and what their goals are. Because if you are a single person, you've had this home for 30 plus years, you want additional income and you want to benefit from the asset that you've created all of these years, I don't see anything wrong with you getting the proceeds for the next, let's say, 15 years of your life and living comfortable and not worrying about that. But that's also if you don't have anyone to leave that home to, right? Because if you do have someone to leave that home to, technically you are consuming that equity as you're living. So then when you sell the home, you're either going to get way less of what the home is worth because they've technically given you money up front. And if you have no heirs, then technically it will go to the bank, and then the bank will go ahead and take care of the sale of that property.
And what are some of the fees associated with a reverse mortgage? Some
Mhm.
people think, in the comments that there's many fees associated with it.
Yeah. So the main things that you pay for a reverse mortgage is pretty much what you're paying if you were to refinance your loan, because technically you're redoing your loan from, let's say, a traditional loan to a reverse mortgage. So they have to do the paperwork and all that other stuff. So that will typically cost you anywhere between $35 to maybe $4,500. They can also put that $35 to $4,500 into your principal balance. So there's nothing that you pay up front for redoing it into a reverse mortgage. But just know that whatever they're giving you every single month, it's being added to your mortgage.
Okay. Wendy, of the three products that you've talked about, or the three options that you talked about, a home equity loan, the home
Mhm.
equity line of credit, and the reverse mortgage, would the reverse mortgage of those three be the best product to use for living expenses, for ongoing living expenses? Because I guess the home equity, that would be difficult, right? To do, it's like a credit card.
Correct. Yes. The reverse mortgage would be the best if you're just wanting to live off, the amount that they're giving you every single month, because there's no monthly mortgage payments that are required after you do the reverse mortgage, where the home equity, you're going to use it to consolidate debt, to maybe remodel your kitchen, but there will be monthly payments that are required.
Okay. All right, here's a question. Along with the home remodels, along with, let's see, what was the other one? Paying off high interest debt that, people talk. The other one was that they wanted to use for investment property. Wanted to use a home equity for investment property.
Mhm.
In terms of the poll results, right?
Yeah.
What would be the product to use for that if you wanted to buy an additional property?
Mhm. So it depends on your cash flow. If you are buying an investment property, typically what I see a lot of buyers, and something that I'm also getting ready to do myself, is pull out 20% of my home's equity, then be able to use that 20%, buy an investment home. You have to make sure, obviously, that you run your numbers on that investment home, right? What is my mortgage going to be? What is my net rental income going to be? And then how much is my home equity payment going to be? So based on those factors, you will know whether you are actually making a good investment that's going to be able to bring you cash flow, because then you might want to do a home equity loan that has a set monthly payment, a set interest rate, and a set term. If I'm not quite sure on the cash flow, or I'm just going to break even, then I might want to do a home equity line of credit because I am not going to be receiving all of this money from the rental immediately to then be able to commit to a home equity loan that has a set monthly payment. Because a home equity line of credit, you're technically only required to pay the interest every single month. So then it brings down your payment substantially.
Perfect. Thank you.
Mhm.
Do you want to give us other examples that you have, or?
Yeah, let's see. I have
Yeah.
this success story is about financing college education. You might want to do this for, kids that you might have in an older age, or maybe some of your grandkids. And ultimately, financing college education is something that people also do, especially if they know that, their children or grandchildren are going to school for a specific degree. That's definitely going to make them income right after. In this situation, we have Tom. Tom's daughter received an acceptance letter from several prestigious colleges. He wanted to ensure that she could attend her top choice without financial stress. And using a personal loan, Tom could cover the tuitions and upfront fees, but the fixed interest rate on a personal loan is definitely a lot higher than a home equity. So Tom decided to make things easier and ultimately get a home equity loan to then be able to pay for her college education. And instead of worrying about, finances and using a personal loan or a student loan, that would be a lot more expensive.
For those of us, here today, some of us may want to do that for our grandkids, help out, if not funding the whole thing, at least providing for them. So that is a wonderful success story.
Yeah, definitely. And yeah, those are some of the success stories. And again, you really have to think about what is your need? How long do you want to pay for it? Do you even want to pay for it, right? Do you have people, do you have family relatives that you're going to leave your assets to? And if not, definitely live off, that home that you've spent thousands and hundreds of thousands of dollars acquiring, for sure.
Yeah. Oh, I'm sorry. And for interrupting, but of course, if anybody has questions on what product to use, of course, go to your financial advisor if you have one, your financial planner. Who else, Wendy, could provide us
Yeah,
information?
in your banks, they typically have financial planners. You definitely want to also talk with your estate attorney if you have one. Ultimately, figure out what your assets are, if you want to do anything with the assets that you have, and ultimately connect with the mortgage lender like myself, who can advise you and guide you. They should not be charging you anything, so make sure you connect with someone who is there to help you.
And like you said, things to consider at the time are, of course, how much debt, or payments you can make, what you're using the money for, what you need it for, whether you want to leave something behind for your heirs, or do you, want to take all the value of the house out now? So there's a number of questions that I'm sure you'll factor in, right, as you talk to people.
Absolutely. I see a couple questions even in the chat, like what are the fees? So you want to look at what are the fees for all three, right? What are the payment requirements? What is that going to do for your estate? There's so many questions that you need to make sure you check off before you make a decision. And ultimately, an expert should be able to guide you because it's not one size fits all. It's case by case.
Right. Wendy, the number one reason people gave for, using their home equity was for improving their existing, residence or their home. What are some of the potential pitfalls or risks
Mhm.
of using our home equity for those large expenses?
Yeah, the common things that I've seen is, with the contractor, it could be very challenging to estimate what the cost would be, the time period. And what I've seen successful is working with a general contractor who is going to manage your renovation from the beginning to the end. And ultimately that you have certain draw periods for when they get their money, that you're not providing, $200,000 up front for them to remodel your home, that they're giving you some sort of timeline and what those fees are. So then as they're making progress, you are giving them the funding to continue with the progress, right? So those are, expending too much is a common pitfall. The other one, not working with a good contractor, because we've seen a lot of horror stories, right, when it goes wrong. And then ultimately, I think being a little realistic is important, in making sure that you have a range for your budget, that you're not necessarily locked in for a specific budget, and that you also consult with maybe friends or family, someone else who has done renovations to their home. But renovations, honestly, it's one of the best ways to maintain your home's value and use the equity or loan, especially if you're going to remain in that home for a long period of time, right? Having a brand new bathroom, having a brand new kitchen. And you also want to connect with maybe appraisers to really find out what exactly will add to my home's value, because you also don't want to build, $100,000 staircase and find out that it's only going to add $10,000 to your value. You want to make sure that every investment is going to benefit you at the end.
That is like so key, right? It is a home equity loan. It's not winning the lottery. So, you know, live within what you can afford to pay back. Uh, what are the other things to consider, Wendy, in terms of making sure that people can grow their equity and, make it realistic?
I think more than anything, figure out what you're getting into, right? What the term is, how long you have to pay it off. So ultimately, home equity loans or lines of credit are great because they're very flexible with the time frame. Most of them you could pay them off in 30 years. So you can, easily remodel your home if you want to, put it as a home equity line of credit, only pay to the principal, and just live like that. And God forbid you pass away, your heirs could then figure out what to do with the home, right? So you want to make sure you understand the terms, and you want to make sure what the purpose is, that there's a real need for that home equity or loan. But a reverse mortgage, again, in my opinion, is great, as long as you understand that it could go in a way where you lose the home if you don't have any heirs and it goes to the bank, or you have to repay back what they've given you eventually if you decide to sell your home.
Perfect. And of course, to all of you joining us, if you have a question of Wendy, you know, anything regarding how to use your home equity right now, please, write it in. Some of us, of course, like Wendy herself, she wants to use her home equity to purchase an additional property. Many of us want to fix our existing homes. Some of us may be looking to fix our homes so we are able to live in them for the rest of our lives. Who knows? Maybe it's just redoing your bathrooms, your kitchens, something like that. And Wendy was giving us suggestions on how to make sure that you stay within like the market, I guess, the comparable rates in your community, so you're not building your mansion that it's going to be crazy. But if you have any questions, please type them in, and we'll be happy to share those with Wendy.
And I wanted to share, Patricia, I've
Mhm.
also seen it very common, especially in California, LA County, is people using their home equity to build ADUs. And of course, same thing, right? You want to make sure you're hiring a good contractor, but an ADU, you're technically taking your home's equity, which is a savings account, in my opinion, and then you're moving it into another savings, right? You're building that ADU where once it's done, it's going to repay you, and depending depending on what the repayment looks like on the rental for that ADU, it might be sufficient to cover the payment and more. So that's a great way to also use your home equity.
Perfect. Um, you mentioned that it wasn't as complicated to get, home equity line of credit or home equity loan, but what do lenders look for in terms of, us as, looking to get a loan? What are their chances of qualifying for that?
Yeah.
What do you guys, what do they look for?
What I see in a lot of scenarios with home equities or home equity loans during the application is a lot of individuals have a very low mortgage balance and a very low mortgage payment because they've paid their home substantially. So then that helps in qualifying because we don't need all of this income to qualify you. The home equity loan and line, because it can also be stretched out for as far as 30 years, it becomes a lot more flexible for you to actually qualify because they're extending that payment, let's say over 30 years, right? It's a very short application, typically your name, your date of birth, where you've lived, details on the home. And then depending on the loan amount, typically if it's under 250,000, most lenders won't require a full appraisal again of your home. If it's over that amount, then at times you would have to get an appraisal and go through that process. But the process from start to finish technically takes 15 days. And now most lenders have different AI systems incorporated. So for example, for me, I have a system where I could just plug in basic information. It lets me know how much equity you have, what the payment would be. We can decide if you want the full amount, less, or if we want to apply for more. And then within one day, you really know whether you want to proceed or not. And then the process takes 15 days.
Is it more difficult, let's say, for people who are retired, or does it make a difference if we're retired?
No, well, people that are retired, right, you're still getting some source of income one way or another. So we are looking at, for example, your Social Security benefits, and a lot of people don't know this, most lenders can actually use 15 to 20% more of the benefits that you're getting. So we would look at your Social Security award letter, and sometimes we can use, $200 more, $300 more than what your letter is indicating because of the taxes that are involved. So we can use Social Security award, we can use any other income that you're getting through maybe some retirement assets, some annuities that you might have. So there's a lot of ways to qualify you. We can also add a co-borrower, even a non-occupant co-borrower into the loan. But ultimately, if the credit is under 700, more than likely they're going to look at your income. If your credit is above that, they won't even ask for income information.
Perfect. Wendy, we have some questions regarding fees.
Mm-hmm.
And of course, nothing's for free. So can you compare the fees of the products that you mentioned, and like which one would have the least amount of fees, or what would be the most, fee friendly option
Yeah,
for
so
us?
home equity loans and home equity lines of credit are the most fee friendly. Typically, the home equity loan or line of credit, it's about 15 to 1,500 to $2,000 to do a home equity line of credit. If you're doing a reverse mortgage, it's refinancing the loan, so you're typically paying anywhere between $3,500 to $4,500 for a reverse mortgage.
Yeah. Somebody asked about the HUD fees on reverse mortgages.
So a HUD fee is part of the redoing of the loan. So it's one of the fees that's included in that $3,500 to $4,500 range that I'm quoting.
Okay, perfect. Wendy, are there
Just
addition?
to
Oh, go ahead.
I just wanted to add to that. So anytime you are buying a home, refinancing, getting a home equity line of credit, the lenders are supposed to provide you with a loan estimate. And in that loan estimate, you will get a breakdown of every single fee. That way you know exactly what you're paying for and where the money is going. And typically is for recording, the notary, the taxes, if we have to do an income verification, we have to record the deed of trust, and then the underwriting, the processing. Those are some typical fees you will see.
Wendy, you earlier mentioned, right, that there's some possible like scams that we need to watch out for, especially if we're, working with contractors, if we're looking to get a home equity loan, a home equity line of credit in order to improve our home. What are some additional scams or frauds that we should watch out for, especially when it comes to our home equity?
I think ultimately you have to vet out who you're talking to, what company they represent, right? So do your due diligence on Googling that person, Googling the company, making sure that before you commit to anything, they're able to provide you documentation showing what they're telling you they're going to do, because you need to validate that. And then ultimately, meeting that person or going to their actual workplace. You want to make sure that the person and the company that you're talking to are valid. And before you wire any money, or if anything just is suspicious, you have to ask questions, because there is a lot that's going on there. But but you can also go through the NMLS registration site. And the NMLS registration site, you should be able to punch in that individual's NMLS, and you should be able to then get a document letting you know the status of their license.
Perfect. So go to reputable sources. Other places that you can recommend for additional information for us? Like, where else can we go to start doing homework to see like these products and what would make the most sense for us?
Yeah, you can go to sites like Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac will provide a lot of information about home equity lines of credit. They provide just general information. Obviously, if you have a trusted banker, you could definitely go to them to gather more information. You can also, if you want to research, somebody's business license, you can go to the California Secretary County Clerk's office and research a business, make sure they're active. And then you can also go to websites such as the NMLS.com to then research the lender that you're working with.
Wendy, if we go to our banker, will the banker give us like options of all these products, or will they push us, to buy theirs?
Yeah, they should. I mean, most banks offer reverse mortgages. You might find a few that don't offer it, and then you have to go with a different lender. And then I want to say the only bank I think that wasn't offering home equity lines of credit any longer was Wells Fargo. So you just want to double check with your bank. And a lot of things have changed in banking, right? I've been in banking for 19 years now, and nowadays when you walk in there, you either talk to a computer or you have the 800 number. So more than anything, I would say, if you have access to the internet, go online, go to the bank's home website, go to the home equity or home loan section. It will give you tons of information, and then you'll be able to find out if they offer it, what the terms are, and read a little bit more before you set up an appointment to connect with someone.
Oh, wonderful. And that makes perfect sense, because I do know you can make an appointment, but it's good that they provide all this information already online. Wendy gave us some great resources, so we can do some of our research on our own, and then just go get our answers, any answers to whatever questions we have once we go to our appointment. No, that is perfect.
And I think
Go ahead.
just to clarify, Roberta, so most banks, it's like I've seen a split 50-50. So some of them offer it, some of them don't with reverse mortgages. So just check with your bank, and just know that there's other options out there.
So we can find that on their website, right? So if,
Mhm.
whoever we're banking with, we can search looking at home equity products,
Everything
And
will be in the same tab. So when you go to any bank's website, you're going to see mortgages, home equity. It should say reverse mortgage. And if it doesn't say on there, more than likely they don't offer it.
perfect, perfect. And if anybody has any final questions, please, type it in. Wendy, additional tips for us as we, you know, we have our house, we have this incredible, we're sitting on this treasure chest, of resources that are home equity tips for us
Yeah.
as we move forward.
So I think, in conclusion and some key takeaways, we want to make sure that that we understand that tapping into our home's equity can provide access to cash for various expenses, often at a lower interest rate compared to traditional loans. There are different types of home equity loans, so home equity options, excuse me. So you want to make sure you ask if home equity loan, a home equity line of credit, or a reverse mortgage is better for you because they all have unique features. But just remember, the reverse mortgage typically will not require for you to make any mortgage payment. So it cuts that off immediately. But it all depends on your financial needs. And accurately determining your home's value is really essential for understanding your home equity. The example that I gave you in the beginning, if your home is worth 800,000 and your mortgage balance is 400,000, then your equity is 400,000. But that doesn't mean that they're going to let you borrow up to 100% of your equity. So they'll walk you through that as well. And also, don't forget that utilizing your home equity carries risks such as foreclosure and increased debt if not used properly. And many individuals have successfully used home equity to improve their financial situations, demonstrating its potential benefits when managed wisely.
That is perfect. Let's see. Hold on one second. You mentioned some resources. The other thing I do want to let people know is that, of course, AARP has a lot of resources available online as well. And I encourage you to visit aarp.org. So aarp.org for resources. You can, search, everything from, home equity, buying a home. Anything that you want, you can find. You can find it. You can find it there. Wendy, of course, our Let's Talk Dinero with AARP chats always, concentrate on helping people build wealth, keep their money and grow their money. And so everything you shared is perfect. Additional tips on how people can grow their equity. What are some ways that people can, improve the equity that they have in their home?
Well, one way that you're definitely going to improve the equity of your home by doing nothing is buying in a perfect location, because location, right? I know people that bought in 2020 in a perfect location, and fast forward 4 years later, their home is like worth $200,000 more. So that's one way, location, buying a perfect place. The other way is buying the best home in the best location, but that needs work because you can change the details of inside of the home, but you cannot change the location, right? The other ways is really what I've seen improve your home's value through the appraisals is by redoing your floors, by adding different windows, by redoing your landscaping, by adding a bedroom, adding a bathroom, fixing a kitchen, of course, bathrooms. Those are some of the main different upgrades that I've seen really add value to people's homes, because nothing upsets me more, than when we make all of these changes to our home that unfortunately don't add value, but maybe they were because we thought the home looked better or because it was like a feature that we needed in our home, but ultimately it doesn't really add value. Let me see what else. Don't forget, you can always make more principal payments to your mortgage once a year, once a month. And the principal payments are going directly to your mortgage balance. And then ultimately, it shortens the term, right? It shortens the interest that you're paying in the long run.
Wendy, you mentioned all these things, right? Home improvements that add value. How
Yeah.
can we find out, like, what would be some of those improvements that add the most value to our homes?
What I would do is, I spend a lot of time on websites like Redfin and all these other home search sites. But ultimately, what you might want to do is you can actually go to, let's say, redfin.com. You would put in your home's address, and then you would scroll down all the way down, and you would see the different comps, the different homes that have been sold within your community. You can click on those homes and you can actually see exactly what's in that home and why they got, such price for that home. And then ultimately what you want to do is compare that to your home and see what kind of changes your home might need to then improve that price. Because ultimately, besides the bedroom sizes, besides the landscaping, besides the kitchen or bathroom, the other things that are going to affect your home's value is what other price homes are selling for in your area, because the appraiser is going to look at least 4 homes that are similar to yours.
All right, perfect. And is that the best place for us to go search to find, what the equity in our home is?
Yes, it's really just one of the best free sites, easy sites, Redfin, all of the other sites that are available. I'm trying to think if there's nothing for the city, nothing for the state or the county. Obviously, you can always consult with a lender and they can plug in information. We have a home equity projection site that we use. And once I
Okay.
plug that in, it lets me know additional information. But you, as the owner, I think going through Redfin and looking at comps that are similar to your home will kind of give you an idea of what your home's value might be.
Perfect. So we do not have to pay for an appraisal or anything like that. Okay,
No. But if
perfect.
you wanted to, an appraisal is like $600 or less. And then you get a 22-page plus report that breaks down how they came down to that value. They give you photos of the different homes that they evaluated to compare it to yours and a lot of other data. So,
Perfect. And we were just, I had just asked you how to figure out what items to, would bring us the greatest value. I'm
mhm.
sure that would, say if you fix up your kitchen, if
Oh,
you,
yeah.
right? The exterior, I
Why
mean,
the value is lower. So if there's certain issues, it tells you why they took off, X amount of the value.
great idea. Thank
Mhm.
you. Yeah, that might be something if we're looking to, do some home remodeling, find out, where to invest your money. That is perfect, perfect. Wendy, thank you so much. Make sure add your information in case people have any questions. If you want to contact Wendy directly, please, Wendy, share your information on there. I'm sure people would love to contact you direct. Ah, thank you, Wendy. Your phone number, what? Thank you. And of course, once again, I want to mention that AARP has resources available online, and you just go to aarp.org. So www.aarp.org for information. And of course, we're, taping this session. So I know Wendy gave a lot of resources and tips and details. If you missed any of it, you can view the session again. You can also go and see videos of other chats that we've had, other Let's Talk Dinero chats. And for that one, go to aarp.org/Let's Talk Dinero. Once again, aarp.org/Let's Talk Dinero. Again, right there, you'll find a lot of information and additional resources that you can easily access. I want to, Wendy, any final parting words before we conclude?
No, thank you so much, Patricia. Thank you, Adriana. Thank you, AARP guests, for having me this evening. Just don't forget to stay informed, use the resources, do your due diligence, and ultimately, based on your goals, there is a product out there. But I appreciate everyone's time. Thank you so much.
Yes, and remember, let's talk Dinero. We're here uh, to help you, like I mentioned, to make, keep, and grow your money. An example in these Let's Talk Dinero with ARP chats, we've talked about debt management, investing, retirement planning, entrepreneurship. Like today, working on your home equity. And speaking of keeping your money, please mark your calendars for Monday, October the 28th at 4 p.m. for our next Let's Talk Dinero with ARP event. And that one, we will be talking on protecting your assets from scammers. We were just talking about that, Wendy. We're getting close to the holiday season. We're all in the spirit of giving, but that does not include scammers. So please, join us on October the 28th, where we're going to talk about how to protect your assets from scammers. So you'll hear about the latest scams and what you can do to protect yourself. And remember that AARP is here for you with resources and events to help you choose how you live as you age. Visit us once again, aarp.org/Let's Talk Dinero. And you can view some of our previous events and including this one shortly. I want to express my gracias sincerely. Wendy, thank you so much for joining us and giving us all this fabulous, advice and, all these resources. I know that they were included in the chat. So please, our sincere thank you for taking the time to help us and for giving your contact information on where people can reach you. Thank you so much, Wendy, for all of that. We have come to the end of our session. It's been wonderful to connect with everybody, and thank you so much for joining us, and I hope to see you on October the 28th. All right? Feliz Dia de la Herencia Hispana. Happy Latino Heritage Month to all.
Thank you,
Thank
everyone.
you.
My phone's open. Bye.
Bye, everybody.